Hello and welcome to Mint. I am Nasrin Sultana and this is All Things Markets. Global investors, especially in Asia, are reacting and getting anxious about the fast-spreading virus, coronavirus, that started in China. Of course, Indian markets have also reacted aggressively to the fast-spreading virus. In India, the cases have not been very severe, but we do not know how far the implications will be. Remember, Indian stock markets are also reacting to the union budget that was presented by the Finance Minister Nirmala Sitharaman on 1st of February. To understand the implications on investments and stock markets, I am here joined by Rob Subbaraman. He is the head of Global Macro Research at Nomura. So Rob, welcome to the show.
Thank you.
My first question is, what is your assessment of this fast spreading virus on global economy?
I think it's significant, and we should be taking it seriously because one, it's happened in China, and it's continuing to escalate at this point. Two, the timing is very bad in China. It's happened around the Chinese New Year holidays, where millions and millions of workers, migrant workers, go back home. So the spread can be a lot more. But third, as I said, it's China, and China is the second biggest economy in the world. And if you compare China now to before SARS in 2002, it's much, much bigger.
Right.
And so, so far, touch wood, it hasn't been a big effect of the virus on the rest of Asia, but the impact on China growth is going to affect Asia.
Any numbers that you have estimated about the kind of implications because of this outbreak?
It's very hard at this stage. It's still early days, but we do feel that the impact on China's economy is going to be more significant than during SARS.
Okay.
Now, so far, the PMI data that's come out for January has held up well, but we think that's because the survey largely happened before the fear factor kicked in.
Right.
So we think in February, the PMI data is going to take a big nosedive. We think GDP growth, which was 6% in Q4, will slow to at least 4%. Perhaps even weaker than that in the first quarter. So at least a 2 percentage point slowdown.
Right.
That's what happened in SARS. We think it's probably going to be more than that.
Okay.
And that will hurt the rest of Asia.
Do you think that because US and China was into a trade negotiation, we just signed the first phase of the US and China trade deal, do you think how much will the trade, because there was an implication of the trade war, do you think this will be far long than was expected by the economists?
So a lot of people are asking that question: Is China going to honour its trade deal? And part of it is buying a lot more goods and services from the US. And now China's had a pandemic disease which is hurting demand. I feel the US side will understand the situation China is in and cut them some slack. So I don't really expect this to affect the trade deal. One thing that is going to happen from this is the elaborate supply chain for producing manufactured goods is going to be affected.
Right.
And I think this Wuhan flu is going to show the world how important China's economy has become in the global economy. I think there's going to be a lot of unintended or unforeseen disruptions, bottlenecks to production, distribution. And so I think my sense at this early stage is growth globally in this quarter is going to be a lot weaker than most analysts are going to be forecasting.
Right. So, beginning of this year, even last year, there was a lot of concerns among economists about a recession or recessionary trends. An outbreak like this, which most countries were not prepared. Do you think we have gone back to those kind of signals?
I think probably yes. You're absolutely right. There was a lot of talk about green shoots because of all the policy easing, because of the US-China trade tensions easing. I think we're going to find out in the next month that all those green shoots are going to start turning brown. The big caveat I would have, though, is this is a shock. It's a demand/supply shock, but most likely it's a temporary shock. And if you look at, for instance, SARS and other epidemics like this, it's typically V-shaped. You get a sharp hit because consumers, households are scared. There's a fear factor. They don't want to be in public places. They don't go shopping. They don't go traveling. But also on the supply side, firms, either because they don't have the workers or because of government controls, have to cut back production. Right. But both those things are temporary, and as the virus starts to ease off, you'll see pent-up supply and demand, plus policy easing that China's already starting, leading to a strong pickup in growth.
Right. You talk about consumers and the demand in Chinese economy. Do you think metals, because China is a big consumer of metals, you think the consumption, worldwide consumption of metals is going to probably slide and may impact the global economy as a whole?
I think so. I think you'll see energy and metals come under some pressure. Right. I think there's already signs of that in the commodity markets. So yes, there's going to be that effect. There's also going to be the effect from financial markets, right? I think equity markets have come off a lot. We've seen credit spreads widen. So that is a financial tightening as well. So there's the demand effects on tourism. There's the supply effects of just supply side disruptions to production. And then, as you said, commodity price effects, financial market effects. There's many ways this is going to affect not just China, but the spillovers from China to the rest of the world. Right. The worst case for countries outside China is that this virus starts to escalate in other countries, and then instead of just defending their borders, they have to also impose controls, stopping factories from working, and their own consumers will get more scared as well. Luckily, that hasn't happened really yet, but that's another risk around this.
Right. As you mentioned about other countries, India is far away from China. Not many cases have been reported yet. There are cases. But in India, the stock markets, of course, panicked and there was a lot of sell-off. Do you think this will have an impact on the other Asian countries where the outbreak is not so severe?
I think the risk outside China is the region most vulnerable is Asia, more than Europe or the US. Partly because Asia's economies are more integrated to China's. Right. So if China's economy slows, it affects Asia most. But also our work shows that if this virus spreads from China, the economies most vulnerable to an increase and a surge in infections are the ones in Asia. And the ones in particular we would highlight are firstly Hong Kong and Singapore, because they're very small, open economies, also very concentrated populations. They're literally cities, and also very service-based. Right. So they're exposed. We worry about those two. And the third one is Thailand. If you look at the various countries in Asia, the one that has by far the largest tourism revenues is Thailand. Right. It's over 8% of its GDP. And more of those tourists are coming from China.
Right. What do you think about the investment implications? Because you mentioned Hong Kong and Singapore. In India, at least, we have investments coming from these two countries, not much from Thailand, of course. You think this outbreak will have any impact on the investments as well?
I think so. I think, as I said, we're likely to see a V-shaped trajectory for economic growth, and that will affect markets. So right now markets are in a big sell-off, so equities are getting hit a lot. The other thing that could happen soon is central banks start turning more dovish, and so you could start to see short-term interest rates being lowered or expectations of that. But at some point, I suspect there's going to be an opportunity to invest and probably express mostly through equity markets because, as I said, this is most likely a temporary, not a permanent shock. And there is a lot of pent-up production and demand that's going to be unleashed. Once, the key thing I think investors and markets are watching is the infection rate. When does the rate of increase start to slow down?
Right. For foreign investors in the EM basket, because of China's outbreak and the other countries that you mentioned, you think India is at a brighter spot as far as FI money is concerned in terms of allocation, because India has not reported that much of a severe outbreak?
I'm not sure, to be honest, because on the one hand, you're right, India hasn't had many cases. On the other hand, India is a massive population, the second biggest after China, and the health system is not at world standards. And so the risk that you could see it spreading in India, I think, is one that can't be discounted completely. So I think that's on the back of global investors' minds.
Right. Indian economy just went through the biggest event of the financial year, that's the budget.
Yes.
Any assessment?
I'd say overall this was a budget that was longer term looking. It was thinking about India not just this year but 2, 3, 4 years down the track. It was looking at how do we get growth up but on a sustained basis. So those that were hoping for a quick fix, big stimulus that could help growth this year but could lead to problems further out, such as credit rating downgrades, were disappointed. To me, overall, I thought it was a very good budget. I thought it balanced quite well the need for some stimulus to help the economy, but avoiding overdoing it. And so I think overall it was probably net neutral for growth.
Thanks, Rob, for that insightful conversation.
Thank you.
So Nomura expects that once the spreading coronavirus is contained, probably there was going to be a V-shaped recovery. Also, he says that the union budget of India is not so disappointing as being perceived by few market investors. We'll have to wait and watch how these two big risks pan out for the Indian stock markets and for the macro. We'll come back with more details. For more updates, stay tuned.